Adam Creighton, economics correspondent for The Australian. What's the RBA saying in its quarterly minutes about that shock rise in unemployment yesterday?
Well, the RBA only found out a couple of days before, of course, it published this, so it really wouldn't have had too much time to incorporate the new information. But the RBA's been reasonably pessimistic about the jobs market for some months now, and so it says again in today's statement that it expects the unemployment rate to stay relatively high for the next few months, and indeed probably rise further than 6%. And indeed, that's what happened this week. Of course, we saw the rate rise to a 12-year high of 6.4%. So it's not such good news on the jobs front. The economy is not absorbing jobs in the eastern states as quickly as it is shedding them in the west.
What does that mean in terms of the RBA? I mean, do they think the economy is staying as it is, or is it weakening, or is growth a thing of the past?
Well, they're only slightly more gloomier than they were 3 months ago in May. They've shaved the headline growth forecast by a little bit, and so they expect the economy to have grown by 2.5% by the end of this calendar year, and that's down from 2.75% that they had in May, and that is largely because of weaker than expected consumption growth, and that's because households are still fairly gloomy in the wake of the budget. And also there was a pretty sharp fall in resource exports in the second quarter of this year, a little faster than the RBA had expected, and so those things have weighed on growth over the last 3 months. But in the longer run, they're still fairly optimistic. They expect the economy will pick up to grow at an above trend rate of about 3.5%. At some point by the end of the next 3 years.
Right, and what does that mean for interest rates?
Well, I mean, this is the big question at the moment. I mean, until the jobs figures came out this week, economists were pretty much evenly divided about whether the next move would be up or down, but they certainly all agreed it wouldn't be soon. Whatever happened, most people don't think the RBA will change policy until early next year at the earliest. Of course, we saw the very bad jobs figures this week, and that's got some people saying that they might cut rates a bit sooner than expected, although most economists thought that the 6.4% jump in the unemployment rate was somewhat of an aberration because of a change in the sampling technique of the ABS, and so they tended to play down the result, and they expect that the rate will drop again when we see the August figures.
They've also been looking at house price inflation and saying that's growing faster than growth. Is that something to be concerned about?
Well, certainly over the past year, we've seen fairly substantial house price growth in Australia, especially in Sydney and Melbourne, and the RBA has said a number of times that people should be very careful about speculating on house prices, and certainly it would worry about that growth, but they're quite heartened that in the past 3 months the rate of growth in capital city house prices has slowed fairly significantly. It's still rising, but it's not rising as fast as it was a year ago, so that would certainly be reassuring for the RBA.
Right, and in terms of headwinds for the Australian economy, what did the RBA point out that they're concerned about?
Well, I mean, they're very concerned, and they've pointed this out a number of times with the very sharp fall in resource investment that we are currently seeing and will continue to see. And the reason that is a problem is because investment in the non-mining part of the economy has not been picking up as quickly as they would like. There are some green shoots, if you like, in the home building sector. There is quite a substantial pipeline of new houses and apartments that will be under construction over the coming year, and that's of course been spurred on by low interest rates. But outside of that sector, in other parts of the non-mining economy, it's still fairly bleak, such as in the manufacturing sector and various service sectors are not investing very much.
Adam Creighton, thanks very much.
Thanks, Jackson.